Will the stock market boom in 2025? To provide a comprehensive outlook on how the DJIA, S&P 500, and NASDAQ indices might behave in 2025, it's crucial to look at their current performance, historical trends, expert forecasts, and key influencing factors. Recent data paints a promising picture for all three major indices. As of the date of the video, the Dow Jones Industrial Average, DJIA, was up 14.4%. The S&P 500 was up 26.9% and the NASDAQ Composite was up 32.6%. These positive movements reflect a rebound across multiple sectors, particularly technology, energy, healthcare, and industrials. Giants in the tech industry like Apple, Nvidia, Microsoft, Amazon, Alphabet, and Meta have all reported gains, underscoring strong momentum in the technology sector. Each index plays a distinct role in representing the broader market. The DJIA, composed of 30 major U.S. companies, gives a snapshot of large-cap performance across diverse industries. The S&P 500, encompassing 500 leading companies, offers a more expansive view of the market. Meanwhile, the NASDAQ Composite, with over 3,000 stocks, is heavily concentrated in technology and internet-based businesses, making it especially sensitive to tech sector developments. Looking back over the past decade, a few key trends stand out. Long-term growth has been a hallmark for all three indices, with the S&P 500 and DJIA nearly doubling in value since 2012. These indices have also demonstrated resilience during crises, such as the sharp declines and subsequent recoveries seen during the COVID-19 pandemic. The technology sector has been a consistent growth driver, especially for the S&P 500 and NASDAQ. Additionally, sectoral shifts have occurred, with technology and healthcare gaining dominance while traditional sectors like finance have seen a relative decline. Experts have a largely optimistic outlook for 2025. Predictions for the S&P 500 suggest it could reach between 6,500 and 7,000 by year-end. Similarly, the DJIA is expected to climb to 49,500, while the NASDAQ might reach 22,100. These forecasts hinge on anticipated earnings growth, supportive monetary policy, and the possibility of corporate tax cuts. Several factors are poised to influence these indices in 2025. Advances in technology will likely play a major role, with artificial intelligence, 5G networks, and cloud computing driving market growth. The clean energy sector, bolstered by government initiatives and consumer demand, is also expected to gain traction. On the economic front, moderate GDP growth of 2.0% to 2.5%, stable unemployment at around 4.2%, and potentially lower interest rates create a favorable environment. However, inflation may remain a concern, as geopolitical tensions and fiscal policies could keep it above the Federal Reserve's 2% target. Geopolitical dynamics will also be a critical factor. Tensions between the US and China, the ongoing war in Ukraine, and other regional conflicts may disrupt trade and supply chains, creating market volatility. U.S. trade policies, especially under a potential new administration, could further influence global trade and impact multinational corporations. Market dynamics, such as a projected boom in mergers and acquisitions, could present opportunities but also introduce fluctuations. Looking ahead, the outlook for 2025 appears cautiously optimistic. Growth across all three indices is anticipated, with the S&P 500 and NASDAQ likely benefiting most from technology-driven advances. While tech is expected to remain a dominant force, sectors like clean energy and electric vehicles may see increasing investor interest. Economic conditions are generally supportive, but high valuations in the tech sector could limit potential gains or lead to periods of consolidation. Volatility remains a risk due to geopolitical and economic uncertainties. In summary, the DJIA, S&P 500, and NASDAQ indices are positioned for continued growth in 2025, driven largely by technological innovation and a stable economic environment. That said, investors should stay alert to the potential for market volatility and ensure they maintain a diversified, flexible strategy to navigate any unexpected developments. Thanks for watching.